Hey there, welcome back. Today I am going to share with you the top secrets, top techniques used by savvy entrepreneurs to save a lot of money on their taxes. Legally, I might add. Nothing illegal here, everything's legal. You don't want to miss this. Roll intro. Hey gang, welcome back. If you're new here, my name is Jim. Welcome to the channel. I am a trademark lawyer and a YouTube entrepreneur, and on this channel we share the practical tips, tools, and strategies that you need to start, build, grow, and of course legally protect an online business. And of course we do that so that you can live a life where, when, and how you want while building a business that's going to give you financial freedom. That's what we talk about here. I'm so glad you're here to join us. Today I want to share with you some of the top strategies and tips that are used by savvy entrepreneurs to pay a lot less money on their taxes. And when I say like a lot less, I mean like a lot less. Like I was talking with an entrepreneur 6 or 7 months ago, and this person was making $300,000, $400,000, $500,000 a year in their business. And by implementing just one of the strategies that I'm about to share with you, they would have been able to save probably $30,000, $40,000 in taxes at the end of the year. So these techniques are no joke. Like, this is gonna save you money if you've got a successful business and you're looking for ways to not pay the government more money, which I know many of you don't want to do that, and I personally don't want to do that. So yeah, it's big. But here's the deal, and you need to be aware of this. A lot of the things that I'm about to talk with you about, you need to happen before the end of the year. And right now it's October, middle of October, so I'm doing this video now because I want you to get these strategies in place. So you've got a little more than 2 months to do some of these things and really get your stuff in order before the end of the year. So that's why I want to do this video here with you today, because I don't want you sitting there in April with a tax bill from your accountant and wondering, what could I have done to save some money on this? This is a lot of money. Well, I'm about to tell you what you can do to save some money on that right now. All right, so the first tip is not so much a strategy as it is a foundational element that you must have in place to make everything else that I'm about to share with you work. And that is that you have to have a handle on your numbers. I just talk to so many people that just kind of are using Excel spreadsheets. They're looking at their Stripe account at the end of the year and trying to figure out how much money they made. They don't have a system for how they are keeping track of their finances. And you really need to develop a financial system so that you know what your numbers are. You need to know what your profit and loss is on a weekly, monthly, quarterly basis. You need to know how much money you've got in the bank. You need to know, what your percentage profit is, right now versus what it was 6 months ago. I mean, you don't necessarily need to make it that complicated, but you do need to have some of these things in place so that you kind of know that you've got a snapshot, bird's eye view of where you are financially, so that if you're doing better than you were 3 months ago or 6 months ago or a year from now. And you also need to know, okay, well, how much money do I have in the bank, and where is that money going to be deployed in the next couple months? You need to know these things. So that's number one. You need to get a handle of your numbers, because if you do nothing else that I taught you about today, if you get a handle on your numbers, everything else is going to get better in your business. It's kind of like weighing yourself every morning. If you're not weighing yourself, then chances are, well, I don't want to tell you what happens. It's not a good thing. So, but yeah, you just got to know these things. I literally have a dog. Like, how pathetic are you, Bo? You just go lay down. Doesn't want to lay down. So the second strategy, and I know that you're going to be like, Jim, where are you going with this, is you've got to set up your LLC. And the reason why you have to set up your LLC, if you don't already have an LLC in place, is because a lot of the strategies that I'm about to share with you, you can only use if you have an LLC in place. So people that say that an LLC doesn't save you money in taxes, that's baloney. An LLC absolutely does save you money in taxes, because you need that LLC in place to take advantage of some of the tax strategies that you're gonna need to save more money in taxes. So yes, you need to set up an LLC. I challenge you to find a single successful entrepreneur out there who does not have an LLC in place. I challenge you. I'll wait. Go for it. Go look. I'll wait. Did you find one yet? This is a good opportunity for me to get some coffee. All right, now the next strategy is if you are making between $25,000 and $50,000 per year in profit from your business. So now you're at this point where you've got your financials in order, you know what's going on, you got your LLC in place, now you know how much money you're making. And if you anticipate that by the end of this year you're going to be making between $25,000 and $50,000 at least minimum in profit, then you need to go ahead and elect that S corporation tax status. Now, there are some deadlines associated with this S corporation tax status. You have to file it within 75 days of when you start your LLC, or you have to file it within 75 days of the tax year. You're probably wondering, Jim, why the $25,000 to $50,000 per year in revenue? Why is that important? Well, the reason why it's important is because there are costs associated with setting up that S corporation, and if you're not making at least $25,000 to $50,000 per year in net profit, then the chances are that any tax savings you net by setting up that S corporation are going to be eaten up by the cost of running the S corporation. So that's why I say you really need to be making between $25,000 to $50,000 per year before you should go ahead and elect that S corporation tax status. But once you're at that point, or if you're making even more than that, then you definitely need to set that up. Now, I know the other question you're going to be asking, and it's going to be this. It's Jim, wait a minute. Now, I'm past that 75-day window to make that election. Can I still make that election for 2022? Well, the answer is yes, you can, but the time is running out. You really need to get that election in soon. And there is a late relief procedure that you can follow with the IRS, and there's instructions on the IRS website. If that's something you want to do, or if you need help with that, feel free to give us a call. And so you can make that S election retroactive to the beginning of the year. So that's the next thing you need to do, is set up that S corporation if your business is eligible to do that. And so once you have gone ahead and set up that S corporation, then the next thing you need to do is you need to start planning for that year-end payroll. So a lot of people also get confused and they think that they need to be running payroll on a weekly or bi-weekly or monthly basis. That's not true. For an S corporation, you only need to run one payroll a year, and you can wait and do that at the end of the year once you kind of know what your profit numbers are. Because remember, you have to pay yourself with an S corporation a reasonable salary. That's one of the costs of doing business as an S corporation, is you need to set up with a payroll provider service. I'm going to include a link down in the description below, a link to Gusto, which is my preferred payroll vendor. They usually run some year-end specials so to get people signed up. So you might want to check them out and see if they can help you run your payroll. And if you do, I think they give you some sort of Amazon gift card or bonus, and they give me some sort of Amazon gift card or bonus. So I have been a proud affiliate of Gusto for many years now, and they have never steered me wrong. So definitely check them out. They are a great service, and they keep adding to their service offerings year over year, and they can do even more for you. So definitely check them out. It's free to run your first payroll, I believe, which is great, just in time for the end of the year. If you are a true solopreneur, in other words, you don't have any other employees working for you, it's just you and potentially a spouse, then you can set up what's called a solo 401k. And this is a magical retirement plan, probably one of the biggest tax benefits that you're gonna see. Certainly one of the, if you're making a lot of money in your business, it's a great way to sock away a ton of money into your retirement accounts and save a lot of money on your taxes. And here's the nice thing about a solo 401k. You can contribute up to $20,500 as an individual for this 401k plan. In addition, if you're over the age of 50, you can contribute an additional $6,500. So that's, if I'm doing my math right, $27,000 you can contribute as an individual. And that doesn't even count the employer contribution. So as an employer, so you on the solo 401k, you are the employee, you are also the employer. So you as the employer can also contribute up to 25% of the employee's annual compensation. So, and that's up to $61,000. So if I'm doing my math right, that's 61 plus 27 is what, $88,000 you can contribute into this retirement plan for the year 2022. So now you would have to pay yourself a salary of $240,000 or so, $244,000 I believe, to maximize that contribution. If that's the situation you're in, then that is a great tax deduction. Now I will tell you, you have to be careful. And why do I say that? You need to be careful in terms of how much you're contributing or how much you're paying yourself as a salary. And the reason for that is you've also got this thing that's, this is not even one of the tips today, but as a self-employed person, you can take advantage of the qualified business income deduction, which is 20% of the net profit from your business. So the amount you pay yourself as salary does not count in terms of, it doesn't qualify for that 20% deduction. So this is where you need to play this game of, are you going to pay yourself more in salary and take less profit, or are you going to take more profit, pay yourself more in salary? Because there's a benefit to doing each. And so you just need to pay attention to that. And if you have questions, I certainly would reach out to an accountant. That's another tip savvy business owners will tell you, is have a great accountant on staff to talk to you through these different issues and help you decide what's going to be the best way to proceed for you. Now, if you do have employees and you're self-employed, all is not lost. You can still use the next tip, which is the SEP IRA. And the nice thing about the SEP IRA is you don't have to establish the SEP IRA before the end of the year. You actually have until your tax filing deadline for next year. So if your deadline to file your S-election taxes is going to be March 15th, and then you have an extension until September 15th, then you have until September 15th of next year to establish that SEP IRA and contribute to it. The difference between the SEP and the solo 401k is with the SEP IRA, there's no individual contributions. So you don't get that $20,500 contribution that you get with the solo 401k. With the SEP, you can only contribute the 25% of the salary or compensation that you take as the business owner. So if you pay yourself $100,000 a year, you can only contribute $25,000 to the SEP plan. But again, this is all the way up to a maximum of $61,000 that you can contribute to that SEP, or a salary of $244,000 is where you'd be maxing that out. All right, so the next strategy that every wealthy entrepreneur takes advantage of, and I used to work at an investment firm years and years ago before I actually went to law school, and this was something that we started doing in the fourth quarter of every single year for every single client we had. And that is we started looking at their portfolios and figuring out where we could harvest losses. And what do I mean by that? Well, if you have money in a taxable account, that means you have money that's not in a 401k, it's not in an IRA, it's not in a SEP IRA, not in anything like that, but you have money in an investment account that you've been investing in for basically a taxable account. So this is not money that's put into a retirement account. Chances are you've got some losses for 2022. 2022 was a big year in terms of not a good year for the stock market. And so right about now, you might be looking at those accounts and saying, oh, okay, well, you can harvest some of those losses and they can be offset against your income on your tax return. And the nice thing about this is you can do this now, and then if you're holding on to mutual funds, then a lot of mutual funds declare dividends and capital gains in December and then pay those dividends and capital gains out. So you can sell it's kind of like a double whammy here. You can sell those losses at the end of November, beginning of December, and then stay out of those investments for 30 days because you don't want to trigger wash sale rules, which basically says if you were to sell them and then buy back that investment immediately, then that triggers what's called a wash sale rule, and the loss is actually disallowed. So, but you sell them, you stay out of that investment or investment that's similar to that investment for 30 days, and then you can get back in, and you get back in after the dividends and capital gains have been distributed, rebalance your portfolio. All is well in the world. You get to take the loss, you don't get the capital gains and the distributions that are going to trigger additional taxes for you. So win-win-win, right? And that's how that works. And we did that every single year for our clients and saved them a lot of money on taxes when it came time to selling those losses at the end of the year. So we'd always run an unrealized gain loss report to see what stocks or what mutual funds should be sold, and to make sure we trigger those losses for our clients. All right, the next strategy is really a pretty savvy strategy if you think about it, and it not only is going to help you save some money on taxes for next year, but it's also going to help you to bring in a whole lot more clients to your business, and that is to delay your income. And you're like, wait a minute, I thought you just said bring in a whole bunch of new clients. How's this gonna work? Well, let me tell you, it's gonna work because what you can do is you can run a promotion in November or even December and make it a free trial. So if you're running a course or a membership or even consulting, you can offer people to get in for 30 days for free and then bring them onboard them in December, and then they don't start paying until January. And by doing that, you get a bunch of new clients in December, and then they start paying you in January, and then you do not incur a bunch of additional income in December that's going to just increase your taxes. So this is a really great strategy to, again, not only bring in a whole bunch of new clients to your business, but also to defer some of that income that you might otherwise have received in December to next year. And then the last strategy I've got for you today is, this is something that we all do, I think, well, maybe not all of us, but what you should be doing at the end of each year. And but a lot of people just forget about this, and then January comes and they're like, wait a minute, why didn't I do that? That would have saved me a lot of money on taxes. It also would have, freed me up from having to pay some expenses this year, and that's to accelerate your expenses. So just like I say, you want to delay your income until January, you want to take some of those expenses that you've got for 2023 and pay them this year. And so some ideas for things that you can use this with are, you can prepay your rent for next year if you've got extra cash sitting around and you feel nice about prepaying your landlord. If you're renting a business space, you can prepay your rent for next year. You can prepay your utilities for next year. If you are renting office space where you have to pay for water or electric or gas or anything like that, you can prepay those utilities for next year. You can, if you say, you know what, I really need to get a new computer or a new iPad or a new something or other, you can buy those in December, and then you can write that off as a Section 179 expense, assuming you meet certain criteria, and then that's going to save you money for next year. Some other examples of things you can do is if you know that you're going to be taking a trip or going to a conference or doing something like that, or there's something that you want to do in the beginning of 2023 that you can pre-purchase in December, you can do that. So conferences are a great write-off for your taxes, assuming the conference qualifies as a tax write-off for your business. Now, every conference is going to be a little bit different, but if you're going to a conference where you're going to learn something that's going to help you in your business, then typically those are going to be tax write-offs. And so you can write off not only the cost of the conference, but also your transportation and meals. And so these are things that you can start looking at booking in December or even November for next year and save a lot of money on your taxes by doing that. So if you've got extra cash sitting around and you want to do that, so you've got the conferences, you've also got a mileage deduction. So if you're in a business where you drive a lot for work, then don't forget to take that mileage deduction before the end of the year and get a bunch of trips in before the end of the year. Insurance, you can prepay your insurance. So rather than paying quarterly for some of your insurance, if you've got malpractice insurance or auto insurance on your vehicles for your business, anything like that, renter's insurance, you can prepay those expenses for 2023 in 2022. Legal fees. Hey, yeah, this is a great time to get your trademarks in order, to set up your contracts that you need, to purchase contract templates, all those things. I'll include links down below to all of those things, because now is a great time to purchase those things and get yourself set up legally for next year. I also have the Lock It Down Legal Toolkit that teaches you everything you need to know to legally protect your business. Again, links down below. So yeah, those are some of the strategies that some of the savviest business owners, and I know they sound simple, but a lot of people, for whatever reason, just don't do them. But make sure you do. You're gonna sit better at tax time next year. You're gonna be so much happier. You're gonna be looking back at this video saying, Jim, man, I'm glad I watched that video from you. You got some good tips there. So that's what I got for you today. I'll see you next week in the next video. Thank you so much for watching, folks. Have a great day.